What is going on, YouTube Nation? This is Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I found a few articles that are very interesting regarding Omega Healthcare Investors. The symbol is OHI, and I own this stock and I'm very long in it. And I thought it was very interesting. So I want to show you guys this. Normally I don't post videos like days after my shift, but I thought this is interesting. And a lot of you guys that are investors with these guys, I just want to point this out. And it's always important not to have all your eggs in one basket, especially regarding dividend investing strategies. You know, you don't want to put all your money into Apple or O or anything. So it's good to be well diversified in certain sectors. So let me show this article real quick. But again, if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I post dividend stock analysis and stock analysis videos, but I really want you guys to check this out. I find this very interesting, and I'm all amped up on energy drink because I'm going to start on a paper. Luckily, it's due next week, but I want to knock things out. So let's check this out right now. I saw this article. I thought this was very interesting to point out, and this is on Seeking Alpha. They discuss crash alert, avoid Omega Healthcare. So the summary is, we like high yield as much as anyone. Don't dig into the numbers. Sometimes a high yield is a trap. Retail favorite OHI is headed for a crash. Protect your portfolio with these alternatives. Looking for a portfolio ideas like this one, members of high dividend opportunities get exclusive access to our model portfolio. So let's look at this. So they're basically saying, as an income investors, it is crucial that we always steer our portfolio looking forward. Many investors like to look at historical charts and trends, look at the historical dividends and draw conclusions. While knowing where a company has been useful, we need to keep our eyes in the future. What was once a great dividend investment can turn ugly in a hurry. Now, he's not wrong. Today, we look at one real estate investment trust that is headed for a crash. It has great dividend history, but is operating in a challenging and declining environment. Investors who are tempted to buy the dip will find themselves by buying a falling knife. Here's one dividend to avoid and two alternatives to consider buying. So again, I've done numerous videos on these guys. They said it's a popular choice among retail investors. It is an investor in skilled nursing facilities. The bulls point towards a silver tsunami, and a large number of baby boomers are expected to increase demand of medical services offered by skilled nursing facilities. Many have found this story to be compelling. So why investors are so, we can see why investors are so enthusiastic. From 2004 to 2017, they said it appeared for dividend aristocrat status. During that period, the share price went under $10, trading in the 30s. A stock that provided a high yield, growing dividend, and share price appreciation. For over a decade, OHI has been the trifecta. So they're discussing the silver tsunami. They're discussing skilled rehab beds. Note the number of beds and number of facilities has declined since 2010. Despite fewer facilities and beds, the number of patients has fallen faster. Occupancy has declined 84 to 80%, even though there are fewer beds today than 10 years ago. This is before the negative impact of COVID-19. So, you know, they're saying you can't play the pandemic card. This is with the backdrop of 85 plus population being 20% higher in 2019, 2010. People are getting older, but fewer are going to skilled nursing facilities. Let's look at where OHI would be today from their old presentations. They have some data. Here's their facility, average beds, 75% occupancy. So I'm going to just go from there. Okay. They have some data here. So they're saying pick MPW over it. And they're going to say pitch Tekla healthcare investors, which I did make a video on this one. I thought that was very interesting. And so they just have some information. So they're saying, you know, with not enough beds, this is going to be an issue. That's what they're saying. I'm going to jump to another article as well. So this is another article. I'm trying to skim through it as fast as possible. 3 operators have halted rent payments to Omega Healthcare. So the company announced a new business update Tuesday that the non-payers, which represent about 8% of its estimated third quarter contractual rent and mortgage payments, have stopped paying rent in 2021. Omega executives in August reported that just one operator, representing 3% of 30 million of its annual revenue, was unable to pay June rent worth 2.5 million due to occupancy and labor issues. The company soon after disclosed another operator with similar issues. Okay. So it says so far the company has collected more than 90% of its rents in the second quarter of this year. The operator did not pay its contractual August rent of or interest and other loans outstanding that has been indicted that does not expect to pay in September. The update status: Omega holds letters of credit, cash deposits, and certain limited professional guarantees that represent approximately 17.6 million in the aggregate. We are considering our alternative options. No conclusions have been reached at this time. So far, the company has collected more than 98% of its rents in the second quarter of this year. Omega's umbrella includes 65 operators and 949 long-term care facilities throughout the U.S. and United Kingdom. So I'm going to jump to their website again, and I'm just going to explain to you why I'm going to hold on to these guys and why I am pretty much going to be long in them. Now, at one point, the Omega Healthcare Investors was in line with the S&P. They have an 8.73% dividend yield. The market cap is 7.29 billion. The year range is 2808 to 3931. And I'm just going to jump to their dividend history, and then I'm going to conclude a few things. My thoughts. Again, none of this is financial advice. It's for entertainment purposes only. But I'm going to explain to you what I see going on with Omega Healthcare Investors. So jumping to their dividend history, in 2016 it went to 61 cents. In 2021 it's up to 67 cents with a PE ratio of 33.37. FFO is the most important thing. Dividend yield's 8.96%. The annual dividend is $2.68. So going back to OHI with their dividend history, 2015 it was 56 cents. 2021 it is 67 cents. Now, everybody always wants to be concerned with the yield trap. The dividend yield is 8.96%. The PE ratio is 33.37. We like FFO. The annual dividend is $2.68. I'm going to show you a few things about these guys that make things interesting. Okay, looking at the numbers, this is in millions of US dollars. This is 2014. It was 504.787, 2015 743, 2016 900, 2017 908, 2018 881, 2019 928, 2020 892. So even during the pandemic, it's still not bad from what you're seeing, and the numbers are not bad. Okay, I'm not too concerned about it yet. I'm not going to hit the panic button, and I'm going to show you their map and their distribution of Omega Healthcare Investors as well to show you why, what I'm going to conclude at the end. Again, there are 65 operators, 42 states, 1 foreign country, and 949 facilities. So I'm just going to give Ohio as an example real quick. So looking at this, I'm going to go to the PDF document containing the address of their facility. Give an example of my area where I live in Ohio. Okay. So I'm very familiar with a lot of these facilities because either places that I've worked, we've discharged patients there, or I've heard of them because I'm from, Ohio, and you hear about facilities. So Laurel's is actually a really big skilled rehab facility. This one right here, the Willows, Indian Hills, and Euclid, that's pretty busy. I'm going to be honest with you. This one right here, University Manor, that one is busy. A lot of these places, just looking at them, this is just Ohio. They're always busy. And I'm going to tell you that the reps at these facilities do whatever they can to kind of work, woo, patients. They come in that are reps. Hi, my name's so-and-so, welcome, you have interest in our facility. They're good at what they do. And they also have behavioral health facilities. And I'm going to tell you, Behavioral health is off the chain right now. Behavioral health, it is an epidemic. It's really sad. And a lot of these facilities that these guys are a big part of, like the Laurels, that is a big one. Autumn Care is well known for skilled rehab. I'm not too concerned. And again, none of this is financial advice. This is for entertainment purposes only. And I have a disclaimer in the description. But I am not too worried because I'm telling you, they can say this and that about skilled nursing facilities. People are getting sicker, diabetes, hypertension. Insurance will cover for people to go to skilled nursing facilities, Medicare, Medicaid, that type of stuff. People will need to go there. If they go in the hospital, they get a stroke. I mean, people are getting sicker, cardiac issues. There's a lot of things that are going on with people's health. People are getting sicker. So, you can say this and that about baby boomers and retirement, but, they're saying by 2050, 1 in 3, this is a study I saw, 1 in 3, I have to remember who it was. 1 in 3 going to be obese. 1 in 3 is going to have type 2 diabetes. 2050, this is like right around my supposed retirement age. I hope to retire a lot earlier, but the thing is, people are getting sicker. The complacency of the attitude of getting better, it's just not there. And I really wanted to address that with you guys because this is it's sad. People are getting sicker. Obesity is an epidemic. And where do you think these obese people are going to need to go to if they get their foot amputated because they have diabetes? They start dialysis. They, get strokes. Where are they going to go? I can tell you, it's highly recommended they go to skilled nursing and get better. Now, they want to go home health, home. That's fine with home health, but I'm going to tell you, there's a reason why they have skilled rehab facilities. You're in closer observation. You are in direct contact usually with the physicians, and you need an extra eye on you. And I still feel very confident in OHI. I actually bought some OHI today, and they've increased their dividends over time. The revenue is not bad. It's actually, here and there. It's I'm not too concerned about these guys going too bad. It could blow up in my face, don't get me wrong, but I'm just giving you my you know, basically what I'm doing. I'm telling you what I'm doing, and if you don't agree with that, so be it, but I provide a stock and dividend analysis video on everything that I own. I provide my rationales as to why I buy dividend stocks and why it's on my radar, or why I'm buying it. I tell you why I buy it. And I give you my honest, I give you provide my rationales. None of it's financial advice. Again, entertainment purposes, disclaimer, but they are doing pretty well. So that's my honest opinion. And let me know what you guys think. This is a really interesting topic that I wanted to address before I do a long lecture. I thought this was very interesting. And you guys have been fantastic. I mean, we're almost at 6,200 subscribers. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Are you selling OHI? Are you keeping it and buying the dip? You tell me. You guys take care. I will be posting a video tomorrow for sure. So you guys take care and have a good one.